This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 27th, 2016. Eurodollar. So the focus has clearly shifted back to the downside following this latest break and close below some previous support at 110.98. This puts the immediate pressure back on the downside, and a retest of the 108.23, next medium-term support, going back to the 2nd of March, is now the next key level to watch below. This level, of course, guards below the more critical multi-year base down in the 105 area further down. At this point, any rally should be very well capped ahead of 112, while only a close back above 112 would take the immediate pressure off the downside. Sterling dollar. So cable is broken down to fresh 30-plus year lows, with the market trading down into the 132s thus far ahead of this latest minor consolidation. But a break back below that recent low that we saw from the previous week on Friday at 132.28 will do a good job of accelerating declines down towards and eventually below next key psychological barriers at 130. From here, any rally should be very well capped into that previous multi-year base at 138.36. Dollar yen. So dollar yen continues to be pressured to the downside, with the market breaking down to multi-month lows in the previous week, just below 99. At this point, there is risk for a retest of the 99 low, with a break below to then expose next key support in the form of the June 2013 low at 93.80 further down. Look for any rallies from here to be very well capped ahead of 107. Euro Swiss. So Euro Swiss has come under some intense pressure in recent trade, with the market establishing back below some key support in the 108 area. The market has also taken out some critical support around 107, but it will be interesting to see how the market responds on a daily close basis around that 107 level. If we see a daily close back below 107, it'll suggest a more significant bearish reversal, exposing next key support in the 105 area further down. However, inability to establish a close below 107 will suggest that the market is poised for some form of a bounce back towards the recent range highs. Aussie dollar. So Aussie looks to be putting in a lower top now below the 2016 high at 78.35, with that lower top carving out by last week's high at 76.47. A break back below the recent support at 71.45 will confirm the lower top and accelerate declines back towards the 2016 low at 68.27. At this point, only back above 76.47 would compromise that outlook. Dollar CAD. So dollar CAD continues to show signs of the formation of a major base, and a higher low is now looking to be sought out at 26.55, which will be confirmed on a break back above that recent high that we saw going back to the 24th of May at 131.89. Look for a break above 131.89 to then open the door for the next major upside extension towards the 135 to 140 area. Kiwi dollar. So Kiwi has come back under pressure, putting in an intense bearish outside day formation on Friday after setting initially 2016 highs at 72.97. The focus now is on a retest and break below 69.63, which will officially put the pressure back on the downside, exposing next key support at 66.75 further down. SPX 500. So the S&P 500 has finally taken out some critical support around 2020, and this now suggests that the market could be on the way down towards a retest of those critical 2016 lows at 1808 further down. The market has consistently stalled out above 2100 over the past several months and stalled out ahead of that record high from 2015 at 2133. Again, the break below 2020 now suggests that the market could be poised for fresh downside towards a retest of the 2016 low at 1808. Any rallies from here should be very well capped ahead of 2085. Gold. So gold continues with its constructive outlook as the market has recently put in fresh 2016 highs at 1359. Look for the market now to be poised for a fresh upside extension towards next key measure move objective at 1400 further up. Any setback should be very well supported, ideally ahead of 1250, while ultimately only back below 1200 would negate the highly constructive outlook for gold.